everybody. I just wanted to make a quick update video on a few stocks just to recap now that we're past the election. The first one I would like to cover is Digital Turbine. Last video it was at $28 and I had mentioned not to sell it because it's more than likely going to go back up. It went back up Friday to a high of 42 and is currently on Monday sitting at $39. If you decided to sell or do decide to sell, then although I would recommend holding just for the long term, selling is cool too. If you feel that you need to go ahead and just reap the short-term profits, then a profit is a profit, no matter what way you cut it. So I would continue to hold it, despite it going a little down from that 42 mark, and maybe for some of you it's a time to rebuy. I would not rebuy unless it made a serious dip. But really, that's all for Digital Turbine. Their earnings per share were, they beat expectations. The earnings per share ended up being 15 cents rather than 11 cents, which was really good. Unfortunately, the beat in the earnings were not truly emphasized in the market as they should have been, because the market was down. It was in a downtrend at the time, and so the impact that earnings report could have was very limited. So I had the hopes it would shoot up to $50 or $60, but unfortunately timing was not our friend, and it seemed to only shoot to 42. That being said, it seems to have a stable growth track record, and so looking here on out, it looks like a stock that for long term will pay off regardless. That's all I'm going to cover for Digital Turbine. Just a quick recap. The next one is going to be Republic Services. We had caught it when it was at about $93. I made the prediction, if I remember correctly, at about 101 to 103. Now, last week during the economic downturn, it did dive to 86, but I had emphasized in that particular video that this was a time to buy. Even though a lot of people sell, it's a time to buy because it's a low point, but the economy's on its recovery. So as of right now, Monday morning, it is at 102.08. So it has reached the goal that I had set, which really wasn't very high. I had mentioned that it's something that you would want to hold for a real long term. It's a safer investment. It's not as high risk, but because of that, it's not going to be as rewarding. It's not going to be as volatile. So yeah, Republic Services, it's made a 12% increase this past week, which is fantastic. And its earnings were great this quarter. So in quarter 3, year 2020, the estimated was 82 cents. That was the estimated, but the actual ended up being $1 in earnings per share, which is fantastic. That's a great increase in it, and it has a lot of potential going forward. It has had a monthly trend of 8%, but that was when the stock was sitting at about $93, which I believe was actually when we first covered this one. It had a decreasing trend and eventually reached its low point on October 27th, or October 28th, I'm sorry, at 86.64. Of course, now it's currently sitting at 102. So if you bought this stock at that low point, good job. And even if you bought it at 93, and as long as you took the dive, you're doing good. If you decide to sell and reap the profits, like I mentioned on Digital Turbine, that's a no-fault thing. Nothing wrong with taking some profit. But with the way Republic Services seems to be going, it looks like there's more potential than just 103. Just to let all of you know, it does have a trend of shooting up in the morning and then evening out throughout the entire day, and then shooting up and then evening out. So it's not something that seems to be continually going up, like on an hour-to-hour basis. It's just mainly day-to-day or week-to-week. Or, sometimes it has this downtrend, but they're all going to have that. So that's going to be Public Services. That's the extent I'm going to cover on it. Just a little update. The third one I'm going to briefly go over is Amarin. Now, this one's been through the ringer recently, and I had recommended it as a potential buy candidate. In fact, I had mentioned it was going to be a cautious buy candidate. Now, the past week, it's down 12%. It is sitting at $4.39, but that's not its all-time low. Its low was, November 6th at $4.24. This stock is a good stock. Its PE ratio is fantastic. It's at 13 as of when I checked it last night. So it's not up to date today. But its price to book ratio is, if I remember correctly, at about a 2. I'll show it on screen. And those are fantastic statistics. So those statistics don't really reflect the stock price currently. I still think that, although being a little cautious, it would be a good buy because of its long-term potential. I mean, if we're being real here, this year hasn't been too great for them. They're down 75%, and it's probably more than that. It's probably really near 80%. So it's been a rough year for Amarin. But on the 5 years, they're up quite $2.32, which doesn't sound like much, but that's an increase of 112%. So it's still got life to it, and I don't think it's out of the question. It would be something to watch if you haven't bought it yet, but do be cautious in buying it. Just really look into it and see if it's something that you understand. If you don't understand those type of companies, I wouldn't jump into it because it seems to be higher risk. But I think overall it's a good company, and we'll just see how it does from here on out, especially now that things are going to be a little less volatile, given that we don't shut down here in the United States. So that's going to be the extent of this video. Throughout this video, I showed some graphs for you, and I hope they help. And until next time, see you guys around. Thanks for watching.